Hello everybody, welcome back to another episode of the Compliance Coach. It's 2026 and we are talking about the top 10 compliance risks in banking, in compliance. So what is it? AI? Is it cyber risk? Stay until the end of the episode and you will see it. My name is Rolf Ebert, 20 years of experience in the banking sector. I'm here to guide you, explain, giving my insights, thinking and impacting compliance differently. Hello everybody, welcome back to the first episode in 2026. What could be a better topic than talking about the top 10 compliance risks in banking in 2026? Now, some of you might know that I did already in 2024 an episode on this one. Have a look what you find out, what are the topics which have changed, and I will guide you today in terms of the 2026 elements. Now, 2026 will show us that compliance is not longer an element just of keeping compliant, respecting regulations. It's being ahead of the game. It's about protecting really the banking license to operate in a very difficult environment, which is, drafted by geopolitical tensions, by the development of AI, the scarcity of AML and compliance risk officers, and so on. And last but not least, the kind of nearly impatience by regulators, which of course drawing up an interesting scene in terms of how to deal with the top 10 compliance risks. Once again, that's my personal opinion of how these 10 topics are changed, so take it or leave it. But I think most of you will be aligned with at least the concerns that I'm expecting. Now, number 10 is, and that's not a real surprise, it's everything related to regulatory changes and fragmentation. Now, why is that so important, especially for banks dealing in a cross-border perspective, in multi jurisdictions? They are facing a lot of numbers of regulations and regulators with different expectations, different timelines, different definitions, etc. So it's not that you can bounce back by saying, we wait and see. Here the expectation by and the tolerance by the regulators is nearly zero in terms of when it comes to the generation of results. So the question that you have to ask yourself, can I consistently implement my risk framework in compliance all over jurisdictions, and how do I do this? Do I do this by general policies, by minimum requirements, etc.? So the key message here is regulatory compliance is not anymore a question of volume, it's a question of the quality of your executions. So that's number 10. Number 9 is conduct risk and customer risk. Not really a surprise. Why? Because customers are in the focus of our activity, and if you cannot deal with the customer, you cannot deal with banking in general. So when it comes to fraud, fees, sustainability, complaints, that all are related to the vulnerable part of clients and are in a particular focus of the regulators and supervisors. They expect not only that you are good in remediation, they expect prevention. So when a customer harm is foreseeable, a bank needs to show that it is capable of stopping the element before it shows up. Number 9. Number 8 is ESG compliance. It's a different animal. Why? Because the climate element and the climate discussions are taking place over the years. We have seen 2024 in Brazil was not really a satisfactory outcome. So it's still, of course, an issue for the bank, because the regulators, they do not expect only to have a framework, to meaning just to dispose certain disclosure elements, but to execute on this one when it comes to the governance, the showing which are the controls that you have embedded and who is really deciding on this one. So the integration is a part, but still the ESG element is not the top 3 observation or concern of banks as it is. So in 2026, we can see ESG is not only a failure of a program, it's a failure of governance. And so that might be very important to see. Number 7, not a surprise, and that's related to different elements. It's payment fraud and scams and social engineering. I think all of you like me, we have been already subject or victim to these kind of attempts. When you see, for instance, the numbers, it's quite alarming. In 2024, for instance, the loss related to fraud schemes alone in the US represented $12.5 billion, which is a 25% increase for the numbers that we have available for 2023. So that, of course, is related to the technology, the AI elements, which having a huge impact. But of course, that reminds as well that customer protection is in the focus of the bank's activities. Conduct risk of the customer, but as well as our own employees, is very important in terms of being really accountable as well from a banking perspective. Key message here for me would be fraud is no longer just a crime risk, it's a compliance obligation. Moving forward on the top 10, we are coming to rank number 6, which is the third party and outsourcing risk. Now, banks, as all other players in other markets, are using outsourcing capabilities in terms of buying, archiving data, for instance, getting programs, Microsoft licenses, name it, in terms of providing end-to-end services to the clients. Now, this can very often relate to a concentration risk because you have one provider who is providing the key elements for you, and then of course if there is a failure, data leakage or whatsoever, the bank has a problem. And of course it's a question of how do you deal with the subcontractors of these subcontractors in terms of are you allowing that, do you have an oversight, etc. So the key message here is you can, of course, as a bank, outsource your activities, but you cannot outsource your responsibility and accountability. Very important. Number 5, we are coming closer to the top 3, is not surprisingly cyber security and ransomware. Here the same is in terms of, we have seen already the intersections in terms of the risks which are related to compliance risk, operational resilience, sanction exposure, reputation risk. And we have seen a very dangerous mixture in 2025 where even states have already used organized criminals for this kind of activities as well, in terms of sending out a certain risk for other countries. So we are not only dealing with some kind of splitted organizations, we're sometimes working against a whole kind of a governance organized element. So cyber resilience is now really as well an element which becomes a board level element and not only the concern of a compliance officer as such. Number 4, we are close to the number 3 is, and one of my favorite topics, it's the battle for compliance talents. Why I'm saying that? If you look in terms of how the world of compliance has evolved when it comes to AML, ESG, cybersecurity, blockchain, AI, digitalization, sanctions, and name it, in terms of the skill set, you will find that normally compliance officers do not have the same pace of keeping here the track. So in terms of finding them, the exposure that they are having to deal with, the control fatigue nearly that you have to say, because we're always hitting on the same kind of elements, which leads sometimes to a superficial compliance or the contrary, an over compliance element. And so it's our aim in terms of finding what I call the equilibrium of compliance back and how we can do this. And I have already published some of my previous episodes when it comes to KYC, know your clients and talents in compliance on this topic. It's by establishing what we call the compliance culture. That's a long-term perspective. So here the key message for me is frameworks do not fail. It's moreover people shortage what do. So that's always to take into consideration. We are coming to the top number 3 list, and surprise, surprise, AI-related risks are on number 3. Why is that not surprising? Because here as well, if you look on the world of digitalization and AI that has already been embedded in compliance processes, we see that in the sanction screening, transaction monitoring, client interactions, and fraud detections. These are already elements which have been embedded. Now, The counterpart of this one is that you need to explain of how you come to a risk and why you have excluded this kind of alert and this not. So this kind of explainability to third parties, auditors and regulators, which is sometimes tricky. It's a question of accountability, of who in your organization is really taking care of that. Is it an IT problem? Is it the operational team? Is it the compliance team? And so on. It's a question of data integrity in terms of how can I protect the data of that it's used correctly within the bank, and the governance elements and data privacy elements. And now if you see that in comparison to in terms of how the criminals are using AI, you see, however, one very strong element that we are not playing with the same rules, meaning we need to apply data privacy, ethics, etc., which criminals do not do. So in terms of saying here we're in equilibrium between compliance and the criminal, it's far beyond the reality. And we see that as well when we look, for instance, at the EU AI Act, which is treating failures not as purely IT issues, but as governance failures. So my message here is, if you cannot explain, audit, or explain the governance of your AI, this is not an element which can be related to a regulated bank. So you need to have as well procedures and processes which are taking that up. Number two, surprise, surprise, and that of course in the time of the politics, it's not a surprise, sanction and geopolitical tensions. Now, we are in year 2026 still. The Russia-Ukraine topic is on. Taiwan, China, the behavior of the US government in Venezuela and other countries is still of an element. And that, of course, has an impact on the banks, because it's expected from us as a market player that there is zero tolerance. However, in terms of what is given as guidelines when it comes to sanctions, regulators are very often hiding behind some kind of terminology or definitions without giving clarity to this one. So that ultimately belongs to the bank, and that makes an exposure to regulators as well as to clients, which makes the element not easy. So ownership and control detection, very important in terms of who is behind the trust, who is the owner of the asset. Circumvention in terms of trading activities, commodities, the kind of ghost and fleets which are using different ships for the cargo shipment, etc. This means you need to have as well a certain expertise within the bank, which, especially for smaller private banks, is a huge risk. Now, if we're talking about huge risk, we're talking about as well of an impact, because if you see in terms of the fines that have been given the time against BNP, but recently as well against other banks, the reputational damage, the elements are quite enormous. And so there is no surprise that even FINMA in 2025 on the risk monitor mentioned that as a Swiss regulator, they are really focusing on the geopolitical tensions and environment. The ECB stresses as well the resilience of banks within this geographic environment and the shocks and the waves that are coming from that. So we could say that sanction compliance is not about volume, it is about precision, governance, and escalation. And my key message here is as well, in sanctions, one client can destroy a year of credibility, and it's at the very end not a question in terms of who was it or which bank. Even the jurisdictions is not clear, it's the banking sector. So everybody is playing the game for everybody. We are moving to the winner of 2026, and no surprise, it's again anti-money laundering. Why is that so? Because, of course, the elements that we have seen in the digital transformation, AI, the sanctioned geopolitical tension, crypto, blockchain, scarcity of AML talents, all that together are creating a very difficult environment and element when it comes to dealing with all kind of related anti-money laundering elements. And we saw in Switzerland as well as beyond high number of enforcement actions against banks. There's costly remediation, restrictions on onboardings, PEPs, etc. long-term reputational damage, as I mentioned before, here as well, not only for a bank or for a jurisdiction, but for the whole financial sector, which of course it's a huge risk for all of us. The risk drivers are, of course, the crypto assets, high-risk jurisdictions, which in geographical difficult markets is not an easy element. Opacity, of course, and complexity of these elements. And last but not least, we saw as well that now with the setting up of the AMLA authority in the EU, there's of course a huge shift of this kind and concentration of the supervision intentions, which of course will lead to certainly in higher enforcement, hopefully as well to a more harmonization and effectiveness of these rules in the EU, which of course needs to be supervised on our side. So supervisions increasingly do not just have a look on the test effectivity or the policy wording, but in terms of how effective is your program, AML program in reality, whenever it comes to these kind of hits. And the question is, in terms of the operational resilience as well to the compliance part, are institutions capable after a hit to turn it into a positive sense? How quick they are capable of motivating and getting the right people together to get the ship back into the force? So basically here my topic is the AML failures do not weaken controls. The AML failures, they weaken the trust in a whole institution and even in a whole kind of a business activity when it comes to the financial markets. So last but not least, AML is not a compliance topic, it's an existential one. And with this, I will close the first episode in 2026. I hope you have learned a lot of nice elements when it comes to the top 10 compliance risks. Please let me know what you think. Any kind of feedback is welcome. My name is Ralf Ebert. I'm the compliance coach, guiding you as well in 2026 throughout the year with certainly very interesting topics. Sometimes you will see even new topics that we didn't touch upon beforehand. I'm looking forward to see you again on this channel, thinking and impacting compliance differently. See you soon. Bye.